Good afternoon. This is Andrea Schnarr with Illinois Mutual. I'm the Disability Income Regional Manager and partner with Diversified Brokerage. I'm not sure if anyone on the Diversified Brokerage team is able to talk, or if you want, just raise your hand and I can definitely get you connected there. But I thank you guys for your patience and holding on as we got started with the meeting. Oh, just one second, I think. But I accidentally double booked myself, so I do apologize for that, but we'll go ahead and get started now. So we wanted to talk today about disability income, or DI 101 for the middle market. Obviously, disability income in general, if anyone is asking about it, it's usually geared or targeted towards the white collar clients, which is going to be like your doctors, dentists, and surgeons making much higher, a higher income. And it's a totally different plan design, or more of a Cadillac plan that we would offer to those clients. Illinois Mutual, we've always been known as that middle market carrier. And so we are going to talk today about how we promote our plan designs a little bit different than what you'd be used to. So a little bit about Illinois Mutual. We've been in business for 110 years, based out of Peoria, Illinois, with about 200 employees in the home office. We are in our 5th generation of leadership with the McCord family, and we are an A- excellent AM Best rated company. What I love about this image here is DI, as I started to mention, is targeted towards the white collar clients, which if you think about an iceberg, there's, the top 10% is what we see. That's where the DI currently is marketed to. When you look below the surface of that waterline, though, and the rest of the iceberg, that's where the huge opportunity is, especially with Illinois Mutual. So all the clients that you walk towards, the staff of a doctor that you walk past to get to the doctor or to the dentist or to the surgeon, or the skilled trade laborers that you might have come into your home to help do remodeling, or the mechanic who fixes the car, changes the oil, or the hairstylist, the truck driver, those are all going to be great occupations to target, or great markets for Illinois Mutual. And so today we're going to talk about how do we keep it simple for them and keep it affordable and realistic. Okay, it looks like my screen maybe isn't showing, so I'm sorry about that. I hope we can get this. Give me just one second, hopefully. Oh, just one second here. Apparently I started the broadcast but didn't show the screen. So I think now we have this up and running and you guys should be good to go. Thank you for that, and I do apologize. This is the iceberg image I was mentioning. Hopefully that's going to make more sense now. But we will move forward and we'll just keep going with that. So with Illinois Mutual being in the middle market, we are, again, we work with those blue, gray, or white collar clients. Doesn't have to be just the blue collar clients that are the skilled trade laborers that we've always been known for, but it really can be those blue, gray, or white collar clients. The biggest difference is the income ranges of 100 to 125,000 or below. That's going to be a fit for where we see most of our business. So, but a lot of the clients are going to fall within that $40,000 to $80,000 income range. So when you're working with those clients, we realize they're very budget conscious. We have to reposition the plan design, the traditional plan of, let's say, a 90-day waiting period, age 67 benefit period, and, max benefit amount with all the riders. That's not realistic for the middle market space. That's where it gets, we give our clients sticker shock. And that's how we hear that disability can be too expensive or it's too difficult. So today we're going to talk about how we can make it, make affordable plan designs for these clients in the middle market who are very budget conscious. A couple of stats here for you. Why sell DI? 90% of long-term disability claims are actually due to illness. But when we hear the word disability, most of the clients and most of all of us think of the tragic accident or injury that's going to cause me to be disabled long-term. The reality of that is, though, only 10% of your long-term disability claims are due to accidents. 90% are due to illness. Not to say accidents don't happen, because they do all day, every day, but it might just be that they're recovered within 3 months or 6 months or a year. Another great stat is 95% of those long-term disability claims are not work-related. So another common setback you might get from your clients would be that, oh, I've got workers' compensation, I don't need disability coverage. Well, 95% of those long-term claims don't happen on the job. That work comp policy is not going to protect them. So just a couple steps to help you overcome those common objections and realize the importance of bringing up the DI conversation to your clients and making sure that they're protected. This one I love, and I think it's more and more important, every day. A lot of times, if you sell life insurance, your clients might ask you, to get life insurance to cover the mortgage. They want to make sure that if something happens and one of the, spouses or single parent, if they would die, they want to make sure that their family isn't going to have to lose their home and their lifestyle and everything that they've built. They want to get life insurance to make sure they're protected. You are 16 times more likely to lose your home due to a disability than a death. But that's the last thing we talk about. We don't bring up the conversation of DI to protect the mortgage or protect the family to make sure they can stay in that home if they get sick or hurt and they can't go to work and they don't have a paycheck. So if you're selling life insurance, I highly suggest or just encourage you to start bringing up the conversation for disability income as well, and show your clients the importance of protecting the mortgage or protecting their foundation of the financial plan with both life and DI, because they're equally as important. Okay, so now I'm going to jump into a little bit about the product, and I'm going to go, just high-level overview here. But we do have two products: our individual DI personal paycheck power, and then we have our business overhead expense power, which is a reimbursement plan for your small business owners, where if they get sick or hurt and they can't go to work, it's going to cover their fixed overhead expenses for that business to help keep the doors open, so they don't lose the business while they're recovering and getting back to work. Both products are going to be guaranteed renewable to age 67. So as long as they keep paying the premiums, it's going to stay in force all the way to age 67. They do cover them or protect them on or off the job, accident or sickness, 24-hour coverage. So it's a true comprehensive plan. The base benefits are going to be all non-integrated, meaning they don't reduce with workers' comp or Social Security disability. And the benefits are going to be non-taxable, because usually you pay your premiums with after-tax dollars. So it truly is that true comprehensive plan that I would encourage all of your clients to get, even if we have to supplement if they are fortunate enough to have group disability coverage. But we do have occupation classes that cover a wide range of occupations, as I've kind of mentioned a few times already. But we go from class 5 being your best rated down to class 1 being the riskiest. So a lot of options there between, with the occupations that we can cover. Class 5 is going to be the best rated, down to class 1 is the riskiest. But with how we build our plan design, we're going to keep it affordable and keep it realistic for those clients. Issue ages are 18 to 60. And now I'm going to get into what our elimination and benefit period options are. We can go as low as 30-day elimination period at Illinois Mutual, but we also have your more traditional 60 or 90-day elimination. And then we can even do 180, 1 year, or 2 year if you want to build around some group coverages for your clients. 30-day elimination period is our most popular at Illinois Mutual, because a lot of our clients in that middle market space, they're living paycheck to paycheck, need the benefits right away. So the 30-day option is the most reasonable for them in that space, and we can keep it affordable, make sure it's realistic for them. Then for your benefit periods, we can go as low as 6 months or 1 year for more of a short-term plan. But then we also have your 2-year, 5-year, 10-year, or age 67 for more traditional long-term DI. Again, as you can see here, our most popular plan design at Illinois Mutual is the focus is let's keep it simple, let's keep it affordable, let's keep it realistic, and get them something in place rather than nothing. And that plan design looks like this 30-day elimination period with a 2-year benefit period. On average, the premium is about $50 to $100 per month in premium, but the benefit amounts we see are usually $3,000 per month in benefit or less. All of this in this plan design helps keep it simple and affordable and realistic for your clients. The 30-day elimination period is going to get them the benefits sooner rather than later, and that's going to meet their needs. 2-year benefit period, I know we get a lot of static on this, thinking that we have to have the age 67 plan because that's the quote-unquote best plan. In reality, we see so much more of the 2-year benefit period because we want to get them something in place rather than nothing. And sometimes that age 67 plan is going to be too expensive for the client to, they can't afford it. So they don't purchase anything. So a 2-year is better than nothing. And the 2-year is going to it's going to beat the industry averages. So industry average length of claim for DI is about 2.5 to 3 years. Illinois Mutual average is 366 days. So your 2-year benefit period is beating, quote unquote, the averages to make sure we get them something in place to cover them for those first 2 crucial years. We want to keep the premium. My other rule of 2 is keep the premium at 1 to 2% of your client's monthly income. So about $50 to $100 per month in premium is our average, and that keeps us around that 1 to 2% in premium range. And again, keep the benefit amount at $3,000 per month or less so we can avoid exams and usually avoid tax returns for a more simplified underwriting experience for you and your clients. From the business overhead expense perspective, we have also 30, 60, or 90-day eliminations, benefit periods of 12, 18, or 24 months. And again, the most popular plan is then going to be that 30-day wait with a 2-year benefit and premiums on average of $50 to $150 per month in premium. So benefit amount, I would say that really does vary on the business overhead expense side. We see some that go as low as $500 per month, others that can go all the way up to $10,000 per month. So it really does depend on the size and type of business and what they're looking for there. For your small business owners, they can purchase just individual DI, just business expense, or both. If they do purchase both at the same time, they do qualify for a 5% discount on both products. So it's a good savings there, to make sure they're going to be protected on both their individual paycheck side, but also keep the doors to the business open. All right, some game-changing riders that we have. Illinois Mutual, we are very, very well known for our return of premium rider, and I would encourage you to at least show this to all of your clients. Return of premium rider, you add it to the policy. They keep the policy to age 65 or 67. At that time, they're going to receive 100% of the premiums paid back to them, minus the claims that we paid out. So if they never use their benefits, they get every penny back. Or if they did use benefits, they still got it all back because we paid them benefits, and then we're just going to pay them the difference or reimburse the difference of what they paid in the premiums from what we paid out in benefits. So it truly is a win-win solution. Coverage if you need it, money back if you don't. This rider is on 45% of our policies, and we've returned over $140 million to policy owners since 1972. So it truly, it's a great feature and very popular for those middle market clients. You can add it to both the individual DI and the business overhead expense. Now, in order to get 100% back, they do have to keep the policy to 65 or 67. However, the question I get is, what if they cancel it or let it lapse prior to 67? Well, they have to have it in force for at least 5 years. And then after 5 years, there's a surrender percentage chart. That the longer they have it in force, the higher that percentage return would be. If they do cancel it at 5 years, though, it's about 11% return, just to give you an example there. But that's a very popular rider. And again, I would encourage you to show that to all of your clients, because when they see the lump sum they can get back on that plan design of those premiums, it's very appealing. We also have the activities of daily living rider. And this is one that I think is growing a lot in popularity. Very inexpensive for this rider, but what you do is by adding it, if the client's disability causes them where they cannot do 2 of the 6 ADLs, we will pay them an additional benefit amount that helps get them up to 100% replacement of income. So on your base policy, that benefit amount can cover between 60 to 70% replacement of income. But as I mentioned before, we're not really looking at the max benefits now. We want to usually keep it affordable, keep it realistic, and it might be a smaller benefit amount than the total they qualify for. So when you add on the ADL rider, that's going to help get them up to 100% replacement of income and make up that difference that if it is a catastrophic rider, they're going to have the extra benefits coming in to cover their needs, especially if they have to have someone help come in and take care of them or be in an assisted living facility. There's going to be extra expenses and costs there. Very inexpensive, as I mentioned, and a really good rider to add for full protection. A few others, or one of the others that I wanted to make sure we talk about, is the guaranteed insurability option rider. This is one that I would include on every single illustration. And what this does is it allows you to go back to your client up to 5 times to give them 5 options where they can increase their benefit amount by up to $600 each option, and they don't have to prove any medical insurability. So all they have to do is prove that their income qualifies for that benefit increase. It's super simple to exercise the options with a one-page application. It'll be a new or additional policy. So it's new first-year commissions for you, plus additional renewal income. And the beauty of this rider is it only costs about $1 or $2 a month to add it to the original policy. So there's so many wins all across the board with this GIO rider. And what I love about it from an agent or advisor perspective is it allows you to do a review with your clients every 2 years. Maybe they don't need more DI coverage or they're not interested, but could you help them with more life insurance? Or do they have enough in retirement? Do they have a child? You know, what else can you help them with that you can do a review every 2 years because of this GIO rider that's the option is going to come up for purchase. So again, those are the three that I would encourage you to consider when you're looking at a disability income policy. I mentioned before these stats on why the 2-year benefit period. Again, just to show you this on a slide, industry average length of claim for DI is about 2.5 to 3 years. Illinois Mutual average is 366 days, or 1 year, 1 day. So it truly is, that 2-year benefit period can fill the gap, get them recovered and get them back to work, or until they can qualify for other sources of income. And the key for the middle market DI that we've found helps with, our success is if you can keep the premium at 1 to 2% of the client's monthly income, that's what we'll sell in the middle market space. If you go over the 2% mark, we're usually going to give them sticker shock and we lose them before we get started. So many times, I've been with the company for over 11 years now, and the first 5 years I was on the internal team as a sales support specialist running quotes on a more regular basis. And so many times I would see the request for a, middle market mechanic who's making $60,000 a year. And the request would be a 90-day elimination period, age 67 benefit period, max benefit amount, and put all the riders on there because we want to show them everything. Well, that premium was, let's say, close to $200 a month for premium. For that client making $60,000 a year, that's not realistic for them. And more times than not, I would hear it was too expensive. They weren't interested in buying it. We gave them sticker shock before we even got them committed or got them interested in the need for DI to protect their paycheck. So if you can reposition your thinking and start with, even that 2-year benefit period with a 30-day elimination, smaller benefit amount to help cover the most important expenses, and then keep that premium at 1 to 2% of their monthly income, I think you'll find that you will increase your closing rates and just the interest in the need for DI because we're keeping it affordable, we're keeping it realistic for that middle market space and building a plan design that they need. As I've mentioned a few times, why we push that $3,000 per month in benefit or less is because it helps keep that situation non-medical. And that's the other, I think common objection with DI is that it can be quote unquote too difficult. I like to just say it's a little bit different, but from the underwriting perspective, how to keep it more simplified for you and for your clients, the key is $3,000 per month in benefit. So if the benefit's $3,000 per month or less, we won't require any exams and we usually don't need any tax returns. Now with each application, we're going to do a prescription history report check and we'll also do a medical information or MIB information check. Based on the application and the questions that were asked from a medical perspective, if that matches up with what shows on those reports and it's a good clean case, we do see policies issued within 2 to 5 business days. However, if they do have some health history and something's not matching up, we might have to do a personal history interview or get some additional medical records there. But to avoid exams and where we shouldn't need tax returns, the key is keep that benefit at $3,000 per month or less for more simplified for everyone, for you and for your clients. All right, a few fact finders. I don't know if I've mentioned yet the MUG concept, but as we talk about keeping it simple, building affordable plan designs that meet their needs or doing needs analysis, we have 2 marketing pieces that I think are super simple to use and they really help you open the door to the conversation for every client you're working with, no matter what your focus in your business is. So first is going to be the MUG worksheet, and this is a great door opener for individual DI. For every client again. And it's not even bringing up the words disability income, but it's simply saying, do you have the MUG plan or who do you have your MUG coverage with? Or is your MUG protected? Well, what's my MUG? Mortgage, utilities, and groceries. If you get sick or hurt and you can't go to work tomorrow and you don't have a paycheck, who's going to pay those bills each month? And let them kind of sit back and think about that. We've had this sales concept for about 8 or 9, I think we're going on 9 years now. And this is still the most popular sales concept we have because it's so simple, it's easy to use, and it helps your clients. It breaks it down for them and makes it real. As I mentioned at the very beginning, when we hear the word disability income, no one thinks it's going to happen to them. I don't need this coverage. Well, the reality is, when you break it down to mortgage, utilities, and groceries, if I get sick or hurt and can't go to work tomorrow, who's going to pay those bills? I know I go to work every day because I have to pay my mortgage. And if I don't have a paycheck, I can't do that. So it breaks it down and makes what a disability income is protecting, makes it real for them. And again, simple to use. The back does have a quote request form. So you can use that to gather your client's information and then fax or email it into your team at Diversified, and they can help run those quotes for you. And then we also, on the same side for the business overhead expense, have that BE needs calculator. So for your small business owners, walk through what's your top 4 or 5, business expenses, the lease or rent payments, utilities, taxes, insurances, and let's make sure that we're going to protect those so you can keep the doors of that business open if you get sick or hurt and you can't go to work tomorrow. Especially for the, 1 or 2 man operation shops, I think it's super important. But even when you have just a few employees and, you're still the key person that the business relies on you to be there, business overhead expense is super important to make sure you're keeping the doors open for not only yourself, so you don't lose that business, but also for your employees. They don't lose their jobs and lose their place of work. They can keep going to work every day because the doors are staying open and they can help you keep that business operating. And again, there is a quote request form on the back of that. And for both of those products, you can add return a premium rider to that to get all their money back if they never use it. All right, this next slide here is kind of transitioning into giving you some ideas on who's a good prospect for DI with Illinois Mutual. And I've mentioned, middle market is going to be a good, it's who, we consider as far as our target prospects. Middle market's a wide range of clients. So what we did is we came out with a few years ago a W-2 upgrade program. And this is to identify certain occupations or W-2 occupations that are industries that we either have good success with or that we want to continue to grow. We think there's a lot of potential or need for DI. So with this W-2 upgrade program, they have to be in an approved W-2 occupation, which this list is larger than what's just showing here on the slide, and your team at Diversified, they can share that with you. But in the paraprofessional space, you think about your dental assistants, dental hygienists, vet technicians, they're going to go from that class 3, which is a middle of the road occupation, all the way up to a class 5. So that's what they get upgraded to a class 5, best rates as a W-2 employee if they just make $30,000 income and they've been in this occupation for the past 2 years. So that's some of the best rates in the industry you will find for these clients, and a great place to get started for DI because I think they see the need for disability income. And then your skilled trade workers. This is what we've built our business on. It's our bread and butter. So your carpenter, plumber, electrician, mechanic, they're going to go from a class 2 middle of the road up to the rates of a class 3. That's going to be huge for them and has made a big difference in us in being able to offer some of the best rates for these clients in the industry. So again, these are just some ideas on where you can get started for DI, but all across the board from A to Z, accountant to zookeepers, we offer DI coverage and some really good rates for those middle market clients. Again, as we're looking for who's a good prospect for Illinois Mutual, we did want to create some marketing pieces that if you target a specific group of clients that are in an occupation, like your registered nurses or the carpenters, electricians, hairstylists, farmers, truck drivers, we created some occupation-specific marketing pieces for them that go after and discuss that occupation specifically and their need for DI. So if you have want to do some marketing to these clients, or if you already have some that you haven't talked about DI to before, reach out to your team at Diversified, and they can definitely get you the materials for this to make a marketing campaign and make a focus on talking to these clients about DI. And if you look at this list, think about the current coronavirus pandemic we're in right now. A lot of these clients are on the front lines of this situation, whether it be that they are the truck drivers delivering everything, the farmers that are still out there working, providing us with food, the registered nurses, even the, essential workers looked at as the plumbers and HVAC, those are all, they're going to understand the importance of protecting themselves, their paychecks, their health. But then you think about the hairstylists that they've been considered non-essential. Hopefully, they're going to be still in business once they get through all this, but they will also understand the importance of having a paycheck. And if they get sick or hurt and they can't go to work, they're not going to want to go through that again of not having that paycheck coming in. So I guess if anything good will be coming out of this situation, it's that hopefully our clients, and Americans will understand the importance of protecting their paycheck moving forward. So now might be a great time to just start thinking about how you want to make DI a part of your business. All right, the next thing is just because of, coronavirus, as we're on this same kind of topic, we all have to think about how we're changing our business and how we are conducting business virtually and maybe not as much face-to-face interaction. So we have to change a little bit. One of those big things that we have that with Illinois Mutual is we do have an agent forum, which is a portal for you where you have access to a web application tool. And that is where you can submit DI applications 100% electronically. It's typing everything, all the information in. You can take that application over the phone. You check boxes for your signatures. You input your client's email address to send that completed application over to them. It'll be in a PDF format. They open it up, confirm the information, check boxes for their signatures, click submit, and it gets submitted to get the underwriting process started. This is capability that you do have through Diversified, but I would to get started with this, if you are interested in this or would like more training on it, I encourage you to reach out to the team there and they can walk you through step by step with how to get started on that, on having that capability to offer to your clients to conduct business. And lastly, what's in it for you? Obviously we want to make sure that our client's most important asset is protected, by protecting their paycheck. Not only does it make sure that they still have a paycheck coming in, but it also protects your business when you add DI to your portfolio. Because think about if someone gets sick or hurt and they can't go to work and they don't have a paycheck coming in, their insurance premiums are probably the first thing that's going to go out the door. They're worried about the mortgage, the groceries, keeping lights and gas on. So not only do you protect your clients, but you also protect your business and what you've built with them. But at Illinois Mutual, we do want to, reward you, incentivize you for your DI business. So each quarter, and we just kicked off a new quarter here in April for second quarter, if you can submit at least 2 disability applications for $2,000 in annualized premium, get that submitted and paid for within the quarter, so by June 30th for second quarter, you would earn a $300 level 1 cash bonus, all the way up to level 3, where if you can submit and pay for 4 DI apps for $6,000 in premium, that gets you a $900 cash bonus. So if you are working with a small business owner and they write or they accept or purchase both individual DI and business overhead expense, that one client can get you your 2 policies for a combined $2,000 premium and help you get qualified for level 1. So it's super easy to do. And again, now more than ever, it's so important to bring up the DI conversation. And at the bottom there, you'll see in blue that DM bonus. If you weren't aware, coming up in May, it's Disability Income Awareness Month. So again, good timing to start bringing up the DI conversation, but just kind of a heads up for you. You're ahead of the game with what most people are aware of right now. But in the month of May, we do offer a special bonus that for each DI application that's submitted in the month of May has to be a minimum premium annually of $300 annual premium. But each DI application that's submitted in the month of May, paid for and issued by the end of July, you will earn an extra $100 bonus per application. So if we start working on it today, your next quote, and you can take those 2 DI apps in the month of May, you'll receive, for the $2,000 in premium, you get the $300 level 1 cash bonus when you qualify for the incentive, plus an extra $100 per application. So you get an extra $200, there's $500 on top of your commissions just by selling and adding DI to your portfolio. So great opportunities to earn some extra cash there. All right, now I'm going to go ahead and open it up for questions. And just want to first off, thank you all so much for your time today. Thank you for attending. Thank you, Diversified brokerage team, for allowing me to talk about DI from an Illinois Mutual middle market perspective. And I do appreciate everyone's patience at the beginning as I was running a little bit late, but we got started and we made it through. So now if you want to ask any questions, you can ask that in the questions pane or raise your hand and I'll see if I can unmute you to ask those questions for the rest of the folks. All right, Chris. I think I just unmuted you, Chris. Can you?
Okay. Yeah, can you hear me?
Yep.
Okay, good.
Yeah, that was great, Andrea. That middle market is so overlooked, but the key is you really have to emphasize with them 2 points. One is you've got to get them to agree that there's a need, because they won't buy the coverage just by looking at a quote. So you have to really hone in on the need, and then you've got to make the premium affordable. If you go at them like with what Andrea said, if you go at them or go at them with the premium that's more than 2% of income, you know, the odds are pretty good that they're going to get sticker shock, and then they just shut down and they won't do anything. But I also wanted to add that we're busy. We're running DI quotes, we're processing applications, and you know, we're getting applications from business owners, professionals, and other higher income earners. Those folks are still applying for disability insurance. You know, for the most part, they're smart enough to understand the risk and they have the income to pay for it. So keep those business owners in mind, and then incorporating what Andrea was showing us about the MUG concept and the affordability of premiums. So that's all I had.
Absolutely.
So thanks, Andrea.
Absolutely. Thank you so much, Chris. And that's a very good point. That's what my coworkers and I have talked about, that we're busier now than I think we were before all of this happened. So everyone is, you know, they're out there, they see the need for DI, they understand it, and it's just, there's no better time to start talking about it. So
Great.
Again, I don't think we have any other questions. So I really do appreciate your input and everyone's time. And if there's anything else I can help with after this, please just let me know.
Okay, great job, Andrea. Thanks.
All right. Thanks, Chris. Talk to y'all soon.
Bye.
Bye.